afternoon, students. Welcome to lecture number 21, where we will be beginning with module number 5 under subject Indirect Taxation. So, module number 5 is nothing but Introduction to Customs Duty. Under this particular module, as per VTU syllabus, we will be seeing what is an Introduction to Custom Duty, what are the different definitions under custom duty that we need to know, what are the circumstances of levy of customs duty, what are the different types of duties of customs, what are the exemptions that are available under customs duty, to see valuation under customs. Under valuation under customs, we have to see valuation of imported goods and valuation of exported goods. How we had seen valuation of taxable value under GST. Similarly, we have to see valuation of the imported goods and exported goods, and we are going to study how to value those goods on which we have to charge the customs duty. Next is we have to see problems on valuation of imported goods. So in this entire module, you have it as a complete theory module, but you will be having problems only on valuation of imported duties. So out of imported goods, so out of the entire thing that we are going to cover, so we are going to have only problems on valuation of imported goods. The rest is the complete theory part. So let us move ahead. So students, today we will be covering the different definitions that we need to know. Introductions to customs duty, like what exactly is custom duty, why it is being levied, what are the objective features. Next is circumstances of levy of custom duty. So first, before starting, let me tell you custom duty is again an indirect tax. Okay, like we know there are two taxes, direct and indirect. Indirect, we know that is income tax, and we know there are 5 heads of income: income from salary, house property, business and profession, capital gains, and other sources. Similarly, there is an indirect tax where the tax is indirectly collected by the consumer and paid to the government. So custom duty is also an indirect tax. Okay, and this custom duty is only imposed on the goods that we are importing or the goods that we are commonly exporting. Okay, so remember that this term, when I use the term customs, remember that it is only applied, okay, to those taxes, or I'm talking about those taxes or those duties which are payable on the goods that are being imported or exported. See students, custom duty is not levied on the person who's importing the goods. It is levied on the goods that are being imported by the person. So remember, duty is levied on goods and not on the person. And that is why it is falling under the category of indirect taxes. Now let us see some definitions first, which we need to be aware under customs duty. So when I go through the entire module and when we come across the word board, you need to know what is the meaning of this board. So board means the Central Board of Indirect Taxes and Customs. Okay, and that Central Board of, when I talk about CBT, Central Board of Indirect Taxes and Customs, so that is again constituted by the Revenue Act, that is Central Boards of Revenue Act 1963. So when I talk about board, it means that I'm talking about the Central Board of Indirect Taxes and Customs. Next, custom area. Now when I go to the module and I come across the word custom area, now what do you mean by custom area is, it is an area of a custom station or a warehouse. Okay, and it includes any area in which the imported goods or export goods are kept before clearance by the custom authorities. See students, you cannot get any item or any good from outside India to India or from India to outside India unless and until it is cleared by a custom authority. There is custom authorities who will give a clearance, then only those goods can go out of India or either come into India. Correct? So now before the clearance, okay, if any goods is kept in a place, in an area, okay, before clearance, if any goods is been kept in any area or place, like a custom station or a warehouse. If the goods are kept, that particular area is called as a custom area. Next is custom station. Now, custom station can be any custom ports or custom airports or international courier terminals. It can be foreign post office or land custom station. So, custom station is only that particular area, okay, station when suppose if you are flying through air, so the custom area will be the airport, okay. And suppose if it is you're going from one particular country to another particular country, then custom station through ship, then the custom station will be the custom port. Okay, so custom station is nothing but it can be custom port, it can be custom airport, okay, or international courier terminal where the goods have to be moved from one country to another. Next is warehouse. What does warehouse stand for? What does warehouse stands for? So warehouse is nothing but a place where goods are being kept, okay, before clearance by the custom authorities. So warehouse can be either public warehouse, that is a general warehouse, or either a private warehouse. But this private warehouse needs to be licensed. Next is what is the meaning of exports. Now, when we talk about exports, it is basically means taking out of India to a place outside India. So export means you're taking goods outside India, okay, and to a place that is also outside India. So taking out of India to a place outside India. Similarly, when I say import, what does import mean? So import again means bringing into India from a place outside India. So getting any goods into India is an import. Sending any goods outside India is going to be an export. Next is India. Now, what is India? The definition of India we have already seen in direct taxes, but in case of custom, what does India mean? So, India is nothing but it includes the territorial waters of India. Okay, now we have already seen as per territorial waters, it is continental shelf, exclusive economic zone, and other maritime zone. Okay, and territorial waters extends to 12 nautical miles into sea from the appropriate baseline of India. So the definition of India here is again it includes the territorial waters of India. So this were the different definitions. There is one more definition called as beneficial owner. So if I use the word beneficial owner, so it means a person, the owner or a person on behalf of whose the goods have been imported or exported. So he means a beneficial owner, means on his behalf, the goods are either imported into India or exported outside India. So these are the different definitions under customs, which will be these words will be commonly used. So you need to very well know what is the meaning of these terms. Is this clear, students, to you all? Yes. And there is Indian customs waters also. Again, it is like the within India, that is Indian custom waters. When I say Indian custom waters, it means that it again extends to up to the limit of exclusive economic zone, okay, up to the territorial waters, continental shelf. So up about within that, if there is any bay, gulf, harbor, tidal river, that also will fall within Indian custom water, definition of Indian customs water. So is this clear, students? Yes.
Yes,
Is the
ma'am.
definitions clear? Now let us move ahead to understand, to have a brief introduction about what is customs duty. So under the introduction to customs duty, we will be seeing what is the meaning of customs duty, what is the objectives of custom duty, and the features of custom duty. Okay, so let us understand the meaning. Custom duty is an indirect tax that is imposed under the Customs Act formulated in the Act 1962. So as we have Income Tax Act, we have GST Act 2017. Similarly, customs duty. This particular tax, see, duty is nothing but tax. So custom duty or custom tax is being imposed under which act? It is imposed under the Customs Act 1962. Okay. Now, this term is usually applied to those taxes which are payable upon goods or merchandise which are imported or exported. As I said earlier also, that custom duty is imposed only on goods or merchandise. Okay, so it is not imposed on persons, it is not imposed on services, it is imposed on the goods or merchandise that are being imported or exported. Next, the power to enact the law is provided under the Constitution of India under the Article 265, which states that no tax shall be levied or collected except the authority of law. So the Constitution of India, it has different articles. So article number 265 has given the power to impose the custom duty, and it clearly states that the custom duty can be collected only by the authority of law and not otherwise. Entry number 83 of the list 1 to schedule 7 of the Constitution empowers the Union government to legislate and collect duties on imports and exports. Students, in GST, we have seen that there is a state government also who is getting the amount of GST, whereas the central government also gets the amount of GST. But customs duty is only regulated and empowered by the union government. When I say union government, it means the central government. So, if it is empowered by the central government, only central government has the right to legislate and collect the duties on imports or exports. That means whatever custom duty is being collected, that duty or tax goes to which government? It goes to the central government, and it doesn't. The state government has no stake in that particular taxes or duties. So just remember, three things you all need to remember. That is, custom duty is an indirect tax. Custom duty is imposed only on goods and merchandise. Custom duty is empowered by the central government. It is being collected, okay, and levied also by central government on the imports and exports. So this is the meaning of customs duty. So did everyone understand what is the meaning of customs duty? Yes, students?
Yes, ma'am.
Okay. Next, let us see what are the objectives of customs duty. It restricts imports with a view to conserving of foreign resources. See, students, what was the need for the government to, or the Constitution of India to impose custom duty? What was the need? Why was custom duty thought into picture or brought into picture? Simple first reason was to restrict the imports. See, what was happening, or what was still happening is, people only import the goods. Suppose people is importing a particular kind of goods, and that same goods are manufactured in India, and people are only uh, you know uh, have the fancy of importing the goods from outside India. So it was hampering the Indian industries, it was hampering the Indian production. So what government said, if it imposes the custom duty on the imports, okay, so what will happen, people will stop conserving or stop preserving the foreign resources. Like, if the government starts imposing customs duty on particular set of goods, which goods are also produced in India. Now, if it is importing, if it is imposing tax on those goods, obviously the value of those goods will increase. Now, if tax is levied on particular goods, the price of that goods will increase. So people will stop importing and will opt for Indian goods. Okay, so it restricts imports. If the custom duty on the imports is very high on a particular goods, okay, people will hesitate to import those goods. and will go in for the goods that are produced in India. So it is restrict the main objective for levying customs duty is to restrict the imports with a view to conserve the foreign resources. Next, it serves as a policy to protect import and exports. Now, students, many a times what happens if there is no law or if there is no act which which governs the imports and exports, then what happens, there can be lot of mis mismanagement happening in the imports as well as in exports, because if there is no law, no act, no policy, what will happen? If there is no procedures, what will happen? People will start importing a lot of goods, okay, and then they will start exporting goods, okay, which are harmful. So what happens if there is no act or law? That is why there was a need to bring an act or law, okay, which will ensure, okay, which will act as a policy to protect the imports and exports in a smooth manner. That is why there was a need to bring this custom act into picture. Next, it prevents dumping of foreign goods. Now, students, suppose if a particular goods is being produced into India, but the cost of those goods that are produced into India is very high. So what people will start doing, or people used to usually do, suppose if a particular country, suppose China, if certain goods are being imported from China at a very cheap rate, same goods in India are costly, but if they're importing from China, it is at a very cheap rate. So what the people used to do, or what the businessmen used to do, they used to import the goods. I'm just giving an example. They used to import that particular goods from China at a cheaper rate, okay, in bulk quantities, and start dumping that foreign goods into India. And they used to sell at their own rates. Like suppose if they are purchasing at, suppose you say 100 rupees, and that same product in India is manufactured at 200 rupees. So again, the market rates would be hampered, because since they have imported it at a lower cost, they would start manipulating with the market rates. So in order to prevent the dumping of foreign goods, if outside it is cheaper, what people do usually, they have an habit, if something is on cheap, they start buying in bulk and start storing it, correct? So to avoid that dumping of foreign goods, okay, the government thought that if we impose custom duty on the entry of the goods, that is on the imports, if we impose custom duty, what will happen? When custom duty or taxes is charged, the price of the goods will automatically go up, and then people will stop dumping those goods, foreign goods, and will start either using the Indian goods or start producing those goods into India. So if you have seen, like if you will be seeing ahead, custom duty, there are different duties that are charged, okay, rates of duties are differently charged under customs. So depending upon the uh, type of the goods that is being brought outside India, the custom duty is being charged. So suppose now I give an example, 100 rupees goods is purchased from China, so a duty may be charged, a heavy duty may be charged, which may turn up to, the total cost may turn up to 250 rupees. In India it is at 200, and 250 rupees, the cost is just to import the goods. So what people will start doing, they'll stop importing the goods and they will start using the Indian products. That is why custom duty is come into picture. That is one more objective why the government has brought custom duty into picture, in order to prevent the dumping of foreign goods. Next, it intends to protect the domestic industries against the foreign goods. This again I'm telling students, because if people majorly start importing, what will happen to the domestic industries? What will happen to them? They will vanish. They will have no market, since all the market is from outside India. Then the domestic industries will be hampered, the economy will be hampered, and that is the reason the government is imposing customs duty, in order to that people, okay, people start buying from the domestic industries, people start manufacturing and production in India. That is why there was a concept called as Make in India by Narendra Modi, that was being brought, so that people are encouraged and motivated to start their own production in India, and people stop importing the goods from outside India. Next, it restricts smuggling activities. Earlier, what used to happen, students, lots of gold. Suppose if gold is cheaper in a country, suppose Dubai, if gold is cheaper, people used to buy lot of gold, okay, without paying taxes, and they used to get it into India and sell at their own rates. Since they brought it at a cheap rate, they used to sell at their own rates without worrying about the market rates. So, in order to have a control on such activities, okay, smuggling is without paying taxes. If you're getting by um by just hiding the goods somewhere and not declaring those goods, okay, it is smuggling activity. So in order to restrict these activities also, custom port was made, custom station is made, custom authorities are being appointed to check the clearance of the goods, to just see whether taxes are paid on all the goods that are being cleared in the custom station before going for home consumption. So in order to restrict smuggling activities also, there was an objective of bringing the custom duty into picture. So is the objectives of why the custom duty was imposed, why the custom act came into picture, is that clear, students, to everyone? Yes, students? Yes? Is this
Yes, ma'am.
okay? Next, let us move ahead to the features of customs duty. As I've already told you, custom duty is an indirect tax which is levied on the imports and exports, and it is levied on only the merchandise goods and not on the person importing the goods. Okay, so it is an indirect tax. That is why it is an indirect tax, and it is only levied on imports and exports. You know what is the meaning of imports? That is bringing into India from a place outside India, and exports is taking out of India to a place outside India. Okay. Apart from that, if there is any transaction, custom duty will not be levied. If it is not an import and export, custom duty will not be levied. Just remember, custom duty is levied only on imports and exports. Next, it is imposed only on goods and not on services. As I already told, that customs duty is only on goods that you're getting from India, sorry, getting into India or sending it outside India. It is on the merchandise, it is not on services. Next, it is subject to a social welfare charge at the rate of 1% on aggregate of duties. This particular thing is similar to the direct tax. See, in direct tax, we charge secondary and higher education cess, okay, at the rate of 4%. If you all remember, students, in your third semester, we had studied that in direct tax, there is, after charging all the taxes, at the last, we used to charge secondary and higher education cess. Correct. In that, we usually charge 4% of whatever taxes are being calculated. We calculate 4% of that. Similarly in customs duty, once all the duties are being calculated, we take a total of all the duties, that is called aggregate of duties, and on that, at the last, we charge social welfare charge at the rate of 1%. So remember, students, social welfare charge is always charged at the rate of 1% on aggregate of the duties for the welfare of public. So is this features of customs duty clear?
Yes. Yes, ma'am.
Okay. Now let us move ahead. Imposition on customs duty. Now, when should we impose the customs duty, which is very important, students? Now, when should the duty be imposed? When suppose I am an importer, okay, and importing goods from US. So when I place the order, should I impose custom? Will the custom duty be imposed, or when the order is in transit? From US it is coming to India, that time is custom duty levied, or once it reaches the custom port, is the custom duty levied? So let us see how does the imposition of customs duty take place. So there are three stages where all the duties and taxes are imposed under customs duty in three stages, which are: first the levy happens, then there is assessment, and then there is collection. So remember, students, that all the taxes and duties under customs are levied in three stages. First one is the levy stage, then is the assessment stage, and then is the collection stage. Now, what is the levy stage? Let us understand. Levy means to charge, levy means to impose. Okay, means you have to impose the tax. Now, what happens in this levy stage? Levy is the stage where the declaration of liability is made and the person or the properties in respect of which tax or duties is to be levied is identified and charged. So the first stage is levy. So in levy, what happens exactly is the goods that you're getting into India or exporting outside India, okay, that goods are being identified, the tax applicable on the goods has been identified and charged, and a declaration of liability is made. Once you know what are the goods, once we know the duty on it, okay, a declaration has to be made. Declaration is nothing but the number of goods that you're bringing into India or exporting outside India, a list of those goods, their value, their rate, and then under levy stage, what happens is the custom duty is being imposed. It starts with levy. So once in levy stage, the declaration is being made of the number of goods that has been got, their value, the duty or taxes is identified and charged. The second stage is the assessment stage. Now, what happens exactly in the assessment stages? It is a procedure of quantifying the amount of liability. The liability to tax or duty does not depend on upon assessment. So the second stage is assessment, which means that once you have charging the duty, next are you going to quantify that what is the amount of liability in respect of the goods that you're importing or exporting. So assessment means you're going to assess the tax or the duty to be paid on the goods that are either imported or exported. Next, the final stage is where the duty or tax is actually collected. The collection of tax or duty may be for administrative or other reasons be postponed to a later time. So collection of duty, what happens is once the levy happens, the assessment happens, the third and final stages, the duty whatever is levied and assessed will be actually been collected by the customs authority, which will be again remitted to the central government. So either the duty can be collected upfront or it will be delayed for certain reasons that will be so so it can be delayed for certain reasons. Okay, the duty will be postponed. Now, the imposition of customs duty, remember students, happens in three stages. First, you levy it. You will not directly collect a custom duty. Suppose if a particular person is coming from outside India, businessman of India is coming from outside India and getting lots of goods with him. So as soon as he comes to the custom station, you will not start collecting the customs duty. Chalo, give me the custom duty. This will not happen. First, what will happen? That person has to declare the number of goods he's getting, has to declare the goods that he is carrying, okay, has to identify the duty charged on the respective goods. Okay, the second thing is he has there will be an assessment the where the actual liability on the goods will be quantified in amount, and the third stage will be the collection stage. So these are the different stages of imposition of customs duty. Now, students, the levy and the rate of customs duty in India are governed by the Customs Act 1962 and the Customs Tariff Act 1975. Now, what is this Customs Act? We know that Customs Act means has all the set of rules and regulations that needs to be followed while carrying out the custom procedures. Now, there is one more act attached to it, that is Customs Tariff Act 1975. Now, what is this Customs Tariff Act 1975? Customs Tariff Act is nothing but the Custom Rate Act, or you can tell Custom Duty Act. Suppose on in respect of a particular goods, what is the rate to be charged? What is the duty to be charged? You can identify that by using this particular act, that is Customs Tariff Act 1975. So Custom Tariff Act 1975 basically is nothing but it will give you the rates, it will give you the duty that is to be charged on the goods that are either imported or exported. Now let us see a little more detail on the Custom Tariff Act. Custom Tariff Act 1975 has two schedules. Schedule number 1, Schedule number 2. What does Schedule number 1 specify? It prescribes the tariff rates for imported goods known as import tariff. So under Customs Tariff Act, you have two schedules, Schedule 1, Schedule 2. Suppose if you're importing goods and you want to know what is the rate applicable on that particular good, then you have to refer Schedule 1 of Customs Tariff Act. So this Schedule 1 is only for the import tariff, that is import duty. And Schedule 2 contains the tariff for export goods known as export tariff. So these are the two different schedules under the Custom Tariff Act 1975, and one more act that governs the custom duties, Custom Duty Act 1962. So these are the two acts that are very important and essential for governing the custom duty. So is this clear, students? Is the levy of customs duty clear, and is Custom Tariff Act clear? Yes, students?
Yes, ma'am.
Yes, ma'am.
Next, let us see what are the circumstances of levy of customs duty. Okay. Now, what is the meaning of circumstances of levy of customs duty? That what will be the circumstance in which you will going to levy the customs duty? So first thing you'll need to understand that there is a section 12 of the Customs Act 1962, and under Customs Act 1962 there is section 12, which is the charging section. Charging section means under this section the customs duty will be imposed on the goods imported or exported. So section 12 of the Custom Act is making it very clear that import or export of goods into or outside India is a taxable event for the duty of customs. Now, what happens is many a times we are facing difficulty, okay, to understand the point in which the importation took place or exportation is going to take place. Okay, because the root cause is for this is the definition of India. See, once you are clear with the definition of India, then you will know whether the import actually took place or the export actually took place. Because the definition of, as per the definition of import and export, we have seen export is taking out of India to a place outside India. Then it is termed as an export. An import is taking into India from a place, bringing into India from a place outside India. So students, charging section tells us that the import and export can be identified, okay, or the taxable event to charge the customs duty will be, and the payment of customs duty will be appropriate only when you are certain about the point of importation and exportation, and that will be certain only when the definition of India is clear. So the import of goods, students, will commence only when the goods cross the territorial waters, okay, and will be completed only when the goods become a part of mass of land within the India. So when the goods are supposed from coming outside India, we are importing the goods suppose from USA, it will be termed as an import only when the goods are crossing the territorial waters of India. Okay, and then from the territorial waters they are reaching the mass land of India, that is suppose either custom airport or either through ship, then custom port. So remember students, up to the territorial border, before that it cannot be treated as an import. If it is in midway of the transportation, you cannot treat it as an import. So you import of goods will commence only when the goods are crossing the territorial waters, and they will complete, that importation gets completed only when they are reaching the mass land of goods within the country. Okay, so the taxable event, now when is, see, what is the meaning of taxable event? The event where you're going to charge or levy the customs duty, or when the event where the taxability on the goods arises. Okay, now the taxable event is not when the goods are still beyond the territorial waters. Only when they cross the territorial waters the importation begins, up to when they are reaching the land of India. Okay, now So the taxable event arises when they the goods reach the custom barriers, that is the custom port. Okay, and bill of entry is filed for home consumption. Now this is a new concept. What is bill of entry for home consumption? Means a particular statement stating that these goods they brought from a particular country, and we want to clear it for home consumption. When I say home consumption means, suppose if any businessman is taking it, he clears it to his factory. Or suppose if any ordinary person is taking it, he takes it to his home. If any, suppose manufacturer is taking it, he takes it to his particular uh, business unit. So when it is cleared for home consumption, then the taxable event will arise only when the importation has been completed. So let us see the taxable event in different situations. Taxable event for imported goods. Now you know what are imported goods. Suppose you're unloading the goods. Now once the goods reach the custom port, you're unloading the goods from the transport. You have to unload the goods. Suppose if it is through plane, you have to unload the goods. If it is through ship, you have to unload. Unloading is nothing but taking from that particular vessel to the outside the vessel. So suppose if you're unloading the imported goods from the custom port, it is not a taxable event. Okay. Suppose if you are if the goods are crossing the date on which the goods are crossing the territorial waters, since that also is not a taxable event, only they have crossed the territorial waters. Since still the importation is not completed. Next, that also is not a taxable event. Suppose the suppose the particular person has filed the bill of entry. Now I told you what is bill of entry. He's filed. The date on which he's presenting the bill of entry is not the taxable event. But taxable event is when the goods, the date on which the goods are crossing the custom barriers. Once the person is ready to take the goods from the custom barriers for his home consumption, that will be the taxable event. No custom authorities will allow any person to take the goods without paying the custom duty from the custom barrier to his house or to his factory or to his production unit or to his business unit. So the taxable event is when the date on which the goods are crossing the custom barriers in case of imported goods. In case of warehouse goods, now what happens, students, many times once the goods reach the custom port, the particular businessman or the particular industrialist who is getting these goods in bulk, he may not be having uh, sufficient space, suppose in his factory or business premises. So what he'll do, he has not paid the duty, customs duty. He doesn't have the required amount to pay the custom duty. What he will do, he'll keep the goods in warehouse. Now there are two types of warehouse: private and public. Public is being done by the authorities, and private is there are certain persons who have taken the license to run private warehouses. Warehouse is a place where the goods are stored till they are cleared for home consumption. Up to that, they are not cleared. So, what is a taxable event for warehouse goods? The taxable event is when the goods are deposited into warehouse. Okay, it is not a taxable event. But when they are removed from the warehouse for the home consumption, the date on which they are removing, that date will be the taxable event for the warehouse goods. So from the warehouse they can remove for home consumption only on the payment of customs duty. From the custom port to the warehouse they can keep without the payment of customs duty, but from warehouse, if they are removing the goods for home consumption, they are supposed to pay the customs duty. Next, taxable event for exported goods. Okay, now taxable event for exported goods arises, okay, only when the custom authorities, that is proper officer, we have seen proper officer in case of GST also, a person who is required or who is the authority in checking the or clearing the goods. So in case of exported goods, only when the proper officer gives a clearance, okay, these goods can be exported, gives a clearance, that is entry outward, signal of entry outward, and is granted, and all the loading of the goods is done for exportation, Okay, that is the time where the taxable event in case of exports arises. So in case of exports, only when the proper officer gives the order of clearance, loading of goods happen, and entry outward is being granted, that is the taxable event in case of exported goods. So this was the different circumstances of levy of customs duty, which in detail we will also be seen in our next lecture. So is this clear, students? Yes, students. Yes. Yes, students. Okay. Thank you so much, students. We are done for the session for today. Thank you.